Hey traders, are you ready to learn about two easy to use moving averages that can propel your trading of the TQQQ to new high levels? Well, stay tuned. Over the past couple of decades, I've been a financial writer. I've written for InvestorPlace.com, Benzinga.com, 10x.com, and a host of other sites. And for a long time, I wrote about dividend stocks and REITs and things like that. But about 4 or 5 years ago, I got into trading TQQQ on a regular basis, and it was tough. There were times when I'd make a little bit of money, times when I'd lose some money. And so I decided I needed to develop a method for being able to trade it successfully on an ongoing regular basis. And so I worked really hard on it, studied it, looked at the charts every single day until I figured out a method that really works for me. And I got to tell you, it's simple too. We don't want to do anything where it's going to be really complicated, with 14 different indicators and 16 different moving averages. I've got a method that I use where we're just basically using two moving averages and two indicators all the time. This is a highly volatile ETF. As I say, it moves really quickly. So as traders, we definitely need to be getting in at the right time and getting out at the right time. If you like this video, I hope you'll consider subscribing to my channel. Hit that big like button down below. In future videos, we're going to talk about trading strategies, risk management, options, leaps, everything and anything to do with the TQQQ, and also news about stocks that affect QQQ as well. It's all going to be right here. So I hope you'll stick around. Since TQQQ is not a long-term holding ETF, it's something we're just going to day trade or at most maybe swing trade. So we're going to use shorter-term moving averages. Whereas a lot of traders and investors will use the 50 and the 200-day simple moving averages for a long-term look at a stock or an ETF. We're going to just use two moving averages. The first one is the 8-period exponential moving average, or EMA for short, and the second one is the 20-period simple moving average, or SMA. And let's take a look at a chart and you'll see how both of these can intersect. So before we can discuss which moving averages that we're going to use for trading, let's just take a moment to look at what are moving averages. And moving averages in stocks or ETFs are a technical analysis tool that smooths out price data. We're going to identify the direction and the strength of a trend with just a single flowing line. A simple moving average, or SMA for short, calculates the average price over a set period by summing prices and dividing by the number of periods. We're going to be using the 20-period SMA, so we're going to be dividing the prices by 20 periods. An exponential moving average, or EMA, is similar but gives more weight to recent prices, making it react faster to price changes. So we're going to be using the 8-period EMA in our trading of TQQQ. Traders using moving averages to spot support and resistance levels, or they may generate buy or sell signals through crossovers, and that's exactly what we're going to be doing, which is when a short-term moving average crosses over a longer-term moving average, and confirm the strength of a trend based upon the slope of the moving average line. And you'll see what that means in a moment. So in this first chart, what are moving averages? We see two lines. We see a blue line and we see a red line. The blue line is the shorter 8-period exponential moving average. The red line is the longer period simple moving average, or SMA. Now I have these set up on my chart for blue and red. The colors really are incidental. You can have whatever colors you prefer. I just use blue and red because they're easy to see. So this is a chart showing a crossover that occurred right here for one place, and then after coming back and hitting the line, it went even higher. Now notice on this chart how the 8-period EMA crosses above the 20 and creates a short-term but very profitable situation. Notice how we made higher highs all through the afternoon after this crossover here. Now here's another example, only this time we're using the 10-day chart with the 60-minute bars instead of 5-minute bars, which I use on the 1-day charts. Right here we have our first crossover, the blue line crossing over the red line, leading to much higher prices. We pull back a little bit, we're going higher, and then we have this gap up day where we go really high, but it's followed by a cross below. The 8-period exponential moving average crosses below the 20, and this results in a very deep pullback, which you can see, and then a recovery, and then on the far right here where I have it circled, the blue line has once again crossed above the red line, or the 8 has once again moved over the 20, and we will get another bullish trend thereafter. So basically the strategy is we're going to buy when the 8 EMA crosses above the 20 SMA, and here I have it circled. Look how much higher we went. And again, we sell when the 8 EMA crosses below the 20 SMA, and back we go above again. And that's the whole crux of using these two moving averages. Very simple. When you set up your charts, you will see immediately. Get yourself ready, get ready to purchase as soon as, not the price necessarily, but as soon as the lines cross. Sometimes you get price movement above the 20-period SMA, but it may pull back. So what we want to do is we want to wait for the actual crossover of the lines. Now just in case you think I was cherry picking, I did want to show you the example from this morning. Today is September 30th, 2025, and we had a kind of a doldrums morning with prices not really moving too well, and then right here we cross. Here's the 8 crossing over the 20, and from there we went up quite a bit. If you had 300 shares of TQQ that you bought right at this crossover, you would have made about $270 in only 25 minutes. So it's a very powerful move, and you notice that the angle of the line is very steep, which means it's even more powerful. So I want to thank you for watching my video today, and the next time we get together I'm going to talk about the biggest mistakes that traders make when they're trading ETFs like TQQQ. So until then, happy trading. See you then.